Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon so you don't have to. Today, we're digging into Crescent Energy Company's latest filing. And let's just say they're shaking things up in the borrowing and lending world. Before we dive in, if you like getting straight business insights without the fluff, make sure you hit that subscribe button. And hey, we have a fantastic community over on Discord, linked in the description below, where we break down more of these documents. You won't want to miss it. So what is going on here? Crescent Energy Company, or CRG as you'll see them on the stock market, has just dropped a report detailing an update to their borrowing agreements. Think of it like going back to the bank to get a bigger loan or a better deal. The big news is an amendment to their credit agreement. This is a pretty significant update, especially as they're planning a merger with another company called Vital Energy Incorporated. Let's break down what this amendment actually means for Crescent Energy. First off, they're boosting their borrowing power. Imagine you have a credit card with a certain limit. Well, Crescent just got a big credit limit increase. Specifically, their borrowing base is going up by a whopping $1.3 billion. This means they can now borrow up to $3.9 billion in total, up from $2.6 billion. This takes effect once their merger with Vital Energy is complete, which is a pretty big deal. It is like getting a bigger wallet just in time for a big shopping spree. But in the corporate world, it means more funds for operations and growth. Another key change is when they have to pay back these loans. The maturity date for their revolving loans, which is essentially the deadline to repay what they've borrowed, has been pushed back to the 22nd of October 2030. This is an extension from the previous date of the 10th of April 2029. This longer runway gives them more breathing room to manage their finances and focus on integrating the Vital Energy business without the immediate pressure of repayment. Now let's talk about the cost of borrowing money. The amendment also includes a reduction in what they call the applicable margin. In simpler terms, the interest rate they'll pay on these loans is going down. It is now tied to something called the Secured Overnight Financing Rate, or SOFR, plus a margin ranging from 1.75% to 2.75%. A lower margin means lower interest payments, which is always good news for a company's bottom line. Every bit of savings here can be redirected into growing the business. And to top it all off, the total amount of credit available to Crescent has been doubled. Their credit facility, which is like a pre-approved line of credit they can draw upon, has jumped from $3 billion to a massive $6 billion. So while the borrowing base has gone up to $3.9 billion, their total available credit is now $6 billion. This really shows a significant increase in their financial flexibility and the lenders' confidence in the company's future, especially with the Vital Energy deal on the horizon. It is important to note that even with this huge increase in borrowing capacity, they are keeping their elected commitments, meaning the amount they're actively using right now at $2 billion. This suggests they are being strategic about how much they borrow and when. This amendment, dated the 22nd of October 2025, is essentially a crucial piece of the puzzle for Crescent's upcoming merger with Vital Energy. It is about securing the financial infrastructure needed to support the combined entity. The fact that they're announcing this now, with the merger pending, signals that the financial terms are set and ready to go once the deal closes. It's a clear indicator that the company is proactively managing its financial health and preparing for future growth. Now, usually when a company enters into big financial agreements like this, it creates a direct financial obligation. And that is exactly what this amendment does. It is not some vague promise, it is a firm commitment to borrow and repay money under specific terms. This falls under the category of creating a direct financial obligation, which is important information for investors to track. Looking at the bigger picture, Crescent Energy Company is clearly positioning itself for a significant expansion through its merger with Vital Energy. This credit agreement amendment is a testament to their strategic planning. They're not just acquiring another company, they're ensuring they have the financial firepower to support that combined business effectively. The increased borrowing capacity and extended maturity dates are strong signals of confidence from their lenders, which is a positive sign. Before we wrap up, it is important to mention that this filing also contains a lot of legal disclaimers which are standard for these types of reports. They're essentially saying that this document is for informational purposes and doesn't constitute an offer to sell or buy anything. They're also reminding everyone that the merger with Vital Energy is subject to various approvals and doesn't guarantee completion. This is crucial legal speak, essentially protecting the company and informing the public about the uncertainties involved in such large transactions. And even when they talk about who might be participants in the solicitation for these mergers, it is all about making sure everyone involved is properly disclosed, especially regarding any financial interest they might have. This is all part of the transparency required by the CC to ensure investors have the full picture. They are strongly urging investors and shareholders to read all the official documents related to this merger, very carefully the registration statement and the joint proxy statement prospectus. These documents will contain all the important details about the transaction. They are available on the SEC's website and the company's websites. This is a standard but very important reminder for anyone thinking about investing in either company. Finally, like most corporate filings, this report is packed with what they call forward-looking statements. This is where the company talks about what they expect to happen in the future. Words like expect, anticipate, believe, and plan are all indicators of these forward-looking statements. They're basically saying, this is our best guess about the future, but things could change. They're very clear that there are risks and uncertainties that could cause the actual results to be very different from what they expect. This includes things like not getting regulatory approvals, integration problems after the merger, or even potential negative impacts on their stock prices. It is a necessary part of the disclaimer to manage expectations and protect themselves from future lawsuits if things don't go exactly as planned. So, what's the takeaway here? Crescent Energy Company is making big moves, and this updated credit agreement is a key step in their strategy to grow and merge with Vital Energy. They've significantly increased their borrowing potential and lowered the cost of that borrowing, all while pushing out repayment deadlines. This all signals a company that is investing heavily in its future, aiming for expansion and operational synergy. The story here is one of financial preparation and strategic alignment for a major upcoming merger. The company is showing a strong commitment to securing the necessary capital and favorable terms to make this combination successful. Looking at the broader picture, Crescent's direction seems to be one of aggressive expansion. Fueled by strategic financing, the strength lies in their ability to secure such substantial increases in their credit facilities, indicating lender confidence, and the reduction in borrowing costs is a clear win. However, a notable risk is always the successful integration of two companies. Mergers are complex, and the statements about potential integration issues and impact on operations are genuine concerns that investors should monitor closely. The combined entity's ability to achieve the projected synergies and avoid significant disruptions will be critical. In conclusion, Crescent Energy is building a stronger financial foundation for its ambitious growth plans. The credit agreement amendment is a smart move that provides much needed flexibility and reinforces their readiness for the Vital Energy merger, while the path ahead has its share of risks, as with any major transaction. The proactive financial management detailed here is a positive indicator of their strategic intent. Alright, that is our breakdown of Crescent Energy's latest filing. What is your take on these financial moves and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more insightful corporate breakdowns. And as always, don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next video.